This is your technical update from the LMAX Exchange Research and Analytics Desk for Wednesday, August 5th, 2015. Euro dollar. So the euro has extended declines this week, with the market now trading down close to that key support, which comes in at 108.09, which is that low going back to the 20th of July. A break and close below 108.09 would open the door for the next downside acceleration towards a retest of the multi-year low that we saw earlier in this year in March at 104.62. However, inability to close below 108.09 will keep this choppy consolidation intact and suggest that the market could be poised for further upside corrective action before the market ultimately trades lower. At this point, though, a break back above the 1130 high that we saw going back to the 27th of July would be required to take the immediate pressure off the downside. Sterling dollar. So cable, despite some setbacks in recent trade, remains constructive over the past several weeks, with the market potentially putting in a higher low at 153.50 ahead of the next major upside extension back towards and eventually above the recent 2015 high that we saw in mid-June at 159.30. At this point, a break back below 153.50 would be required to negate this outlook and take the pressure off the top side. Dollar yen. So dollar yen is back to testing some key internal resistance in the 124.50 area. And if the market establishes a close above the 124.50 level on Wednesday, this would suggest a bullish continuation back towards that recent 2015 multi-year high that we saw back on the 5th of June at 125.85. However, inability to establish a close above 124.50 will suggest that the market is still looking to correct lower before the market eventually looks to resume the underlying uptrend. Monthly technical studies are highly overbought, and so there is still a risk, despite the gains that we've seen, for a more significant pullback over the coming days and weeks. Euro Swiss. So Euro Swiss remains constructive, with the market recently breaking above key resistance at 105.75, and this has set the stage for a retest of the February peak at 108.15. At this point, look for any setbacks to be well supported on a close basis above 105.75, while only back below 104 would take the immediate pressure off the top side. Aussie dollar. So Aussie dollar has triggered a double bottom on the daily chart, with the market now poised for upside towards a measured move in the 75 area. At this point, any setbacks should be very well supported above the 73 level on a daily close basis, with only a break back below and a close below 73 to suggest that the market is poised for a bearish resumption of the underlying downtrend, potentially down towards next key psychological barriers at 70. But if we do see any gains towards that measured move at 75, the gains should be very well capped in favor of a medium-term lower top and fresh downside extension. Dollar CAD. So dollar CAD has broken to yet another multi-year 11-year high, with the market taking out key resistance at 132 and now potentially seen higher towards next key figure resistance at 133 further up. Daily studies are, however, overbought, so there is risk over the coming sessions for some form of a corrective pullback, though we would need to see a break and close back below Tuesday's low at 131.05 to confirm and accelerate declines and open the said correction. Kiwi dollar. So Kiwi dollar could be in the process of carving a short-term base, with the market locked at a consolidation over the past several sessions off that recent low that we saw in the 64.98.99 area. At this point, only a close below 64.99.65 would open the door for fresh downside, while inability to do so will keep this consolidation off that low intact and potentially open the door for some more corrective gains before the market ultimately decides to resume the broader underlying downtrend. SPX 500. So the S&P 500 continues to chop around, though is showing signs of topping after consistently stalling ahead of that May record high at 2137. At this point, though, we need to see deeper setbacks extend below that elusive March low at 2040 to confirm the potential top and accelerate declines. Gold. So gold is in the process of consolidating. It's a bearish consolidation after breaking down to fresh multi-year lows below 1100. And at this point, the market would need to trade back above that previous support, that 2015 low at 1142, to take the immediate pressure off the downside. Until then, there is risk for deeper setbacks and a bearish continuation down towards critical psychological barriers at 1000. It is worth noting, however, that daily studies are oversold, so we could soon see another break higher for an overdue correction.